Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. Yesterday I was doing the recap and everyone was kind of making fun of me because I talked about how I was a little uncomfortable being net short the spiders. Everyone's like, Red Dog, you have to learn how to trade the market both ways. And obviously I do get short stocks, but I'm more comfortable long them. But yesterday I didn't like the way things felt. I didn't like the weakness in the small caps. I didn't like the weakness in the banks. I didn't like the advanced decline line. And the bears made a stand where they had to in the S&P cash around 2474. So to me, I was like, you know what? The new cycle with Washington and, dovish Fed and I just didn't like it. So, on RAA, I tweeted that I'm net short. If you watch the recap, which is free still until September 5th, I did talk about being net short out of stock. So at least I can be flexible. And even if you didn't, go out short spiders and flat, you had a little bit of a spot to get out if you measured that 2460 level. Why was that important? That was your two-day support. We talked about if we can get get below and stay below, you could stay short, you could add to your shorts, or you could at least reduce other positions if you didn't do it last week when we were on CNBC Fast Money, or if you didn't do it yesterday when we did it on the VTF. So anyway, you look at the charts now, and I just want to make sure that people don't say, oh, how did this happen? You know what? It happens methodically, typically. Okay. Here was your topping tail. That was the one that gets you to reduce risk, get you out of some of your loose longs, get you out of tactical, and then that happened. So you saved yourself some pain. And then if you go sideways here, this was your Friday's support, and then nothing happened in North Korea, so we were minus 60 on the oscillator and had a decent oversold bounce into what we call a doji. So in my morning note, I wrote about the doji and said, doji is a pattern of indecision, and what you want to do is you want to look at the levels to see what happens next. If it takes out this 2461 to 2463, you got to be careful long. And if you want to put on more shorts, you can do that too. So what happened? This level got taken out. The gap that it played with got taken out. I thought if it was methodical and slow, we would have got to here, maybe pushed in, came back above it, but it didn't happen. We got here, played with it, stayed below it, so there was no reason to be even trying longs except for a small little paper cut. And then we filled the gap, and all of a sudden now, right back down to this level, and I don't anticipate this being a double bottom. It just, to me, I don't see things happening that way. If you go to the weekly chart, I do think you have to be a little bit more careful that, at this particular point, we are starting to, come in, and there's no reason why we couldn't test this level at some point. I did this on Fast Money, or even, if you don't think so, then the weekly chart pattern or the weekly 21 day, which is also the 100 days around 2412. So why not? Look where we are. I don't think the world is conducive for this type of environment in the stock market where, one of the reasons why everyone says we ran was because of President Trump's potential pro-growth initiative, and now it doesn't even seem like he can keep his cabinet or even some kind of special group together, let alone passing anything. So with that said, earnings season's behind us. It's August. Why not this spot? So look where we are. We're not even 2%, guys. Not even 2% off the S&P cash all-time highs. So don't be in a rush. If you're testing levels, test them. Use the prior day's low. Use your 5, 15, 30-minute low. And if it breaks out, get out of the way. Use also that H-cell setup that if you do get a bounce and it starts to roll down, you could short it, kind of like today. And then once you break through other pivot lows, you're not just pressing there, you're actually short already and you have good average cost, so it gives you a little bit more staying power. One of the clues I talked about is the Qs. Qs actually didn't do so bad, but did get down below the level that we talked about. Actually, that was the weekly chart. The level that we talked about was right here. Okay, can it stay? I actually gave even tighter stops. Your stops here were 143.64, and then I said the real level is 143.19. It sliced through that. So now here you have that outside day that's still in control. You now have yesterday's your third lower high right there, which you'll see. Patty Dom just interviewed me, and it'll be on the front page of CNBC.com. And now we just turned down. So with that being said, I don't think you stand in front of this. This is a pone down move. Yes, do we gap up tomorrow? I don't know. But this does not tell me be long. This tells me get out of the way. Hopefully got out of the way a lot sooner, and hopefully maybe even made some money short. Because believe it or not, on a day like today, some of us made some good money today. Because again, we read what was going on and didn't get caught in the news flow. So anyway, here's your really big support. This is like micro support right now. Tomorrow, we'll see how we handle yesterday's low, which is 141.34 for potential red dog reversal. But day one down, everyone's like, oh, well, look what happened last time we had a day one down. I still don't get long into a day one down because there could be a few more real quick, and I'd rather be out of the way and let price discovery happen. I was riding Apple for a while, sold it yesterday. I even talked on the public Twitter about on day 4. You look for a red dog reversal. Well, you had that yesterday to sell. Some guys got short, made money. I tested it a few times. Actually made money long it, buying strategic levels, but selling the bounce, which we managed. But I have no Apple overnight tonight. We'll see how it deals with tomorrow. Why don't I have Apple? Because I think the market's vulnerable, and all in all, we lost the 8-day here. Okay, last time you lost the 8-day, gapped up. So if it does that tomorrow, I don't care. What I want to do is I want to see price discovery. Okay, this was a little bit of a push through failure above this, and then it broke your last upper support to see if it was going to be special. It's not special now. It could come and test this end of the range, so why sit in it? If you're in it from here and you said I'm not going to touch it, then don't touch it. You didn't sell it, during this whole process. For me, I like to manage it. I also didn't come in Tesla today. I thought if 358 could hold, I would be a buyer of it if things acted special. Obviously, things didn't act special. What do I mean by that? A, it took out this upper support, and B, did not hold this spot. So I am not long this. I did try it once or twice, and I lost some money in there. I thought perhaps if the market was going to hang in there, this could be a leader. Obviously, it wasn't. So no reason to be stubborn. Tomorrow, we'll see if we get some kind of red dog reversal. This is bigger support. You never know how it's going to open up tomorrow. What we'll use is this pivot, this 3351.59 as your point of reference. You open up above it, it could be long versus it. If it opens up below it, you only buy it to do a quickie red to green, and maybe if it reclaims that spot. But that means the market will be a little bit bouncy. Here's your bigger level right here, which is, this is actually 343, which is still, 8 points lower. So, besides the 21-day there, I don't, or on the 50, I don't want to be, just guessing that I could buy here and buy more down. I'll wait to see what tomorrow brings me, especially considering it's a Friday and we've had a good week and it's August and my son's home from camp, so I want to enjoy. He was here yesterday. That video will be up soon. I didn't touch Amazon today. Why? Because it wasn't as compelling as yesterday. I thought maybe, we can get a trade with this gap, and we got a small one. Didn't touch it today. Broke that level. Now it seems like it's going to be heading back down to bigger support. You have your big time high here, your gap down after earnings penalty box. Little red dog reversal gave you a 3-day move to get rejected by the 21-day, and now this is not telling you to be long it. If anything, hopefully it'll hold this level. If not, you could see lower prices, and that's good because we're out of the way and we'll find better prices to buy. Maybe it'll be the 200-day, who knows? But at this point, it's not looking like a long, even though it's 3 days down. Facebook started getting vulnerable yesterday and then broke that 169 level we talked about. Why could you have got out of the way? Because this was your upper support. No one was paying up for things. So all of a sudden now, boom, it's almost below this spot. So this is also something that could lose some momentum. Nothing to be in as an active trader. You close in the dead lows, you get out of the way. Even if it opens up tomorrow, it doesn't matter. If it was going to be special, it would have held 169.25. If you short it when it broke there, congratulations. And now I don't see anything compelling. The 50 days not all the way down till here. So if things start breaking down, they're going to be like, why couldn't Facebook, which has a high valuation, do the same? And then you also have this 164 along the way. So this is, maybe you get a red dog reversal tomorrow around that 166.85 or not. I would step out of the way. The only long I had overnight was Baba calls. Didn't mind. It had earnings. Risk is premium paid. I figured, if I miss it in the morning when it went through 160, which it did, went to 171, I could sell the open. Our options we sold were around 11, 12 bucks. We bought them for 5. Good option play. And now we get to figure out price discovery. It tried to be strong, but it couldn't do it on its own. At this particular point, you have a big topping tail. Okay, after 4 up days, so that's why I wasn't buying it today. I figured it could take out this spot, but I wasn't going to be buying it on day 4. 1, 2, 3, 4, 5 up. So now we'll see what happens here. Does it fill the gap? It's extended from the moving averages. Again, if the market's going to be in a little bit of a corrective phase, no one's going to be in a rush to be buying Baba after this huge move. So we might as well see some price discovery and use today's low tomorrow, which is 163.51. In conclusion, you know what? You have to be on your toes if you're trading over the summer. People lose money over the summer because they blame it on summer trading, but bottom line is people aren't as prepared as they should be or as they are in the fall, the winter, because they're taking a Monday off or Friday off, they're hitting for half days, they're going to the beach, they're not as prepared. You have to be prepared. That's why I'm still getting up at 4:45 every day. I'm still doing my note that takes me 2 hours. And if you want any of that, that's Redler All Access. And I also have the new private Twitter feed, which I give you levels all day long for you to test and get out of the way, and maybe even short. And I try and tell you what I'm doing. Okay, I came in short the spiders, tested a little bit Apple and Tesla, got out of the way, covered spiders, and I did nothing in the afternoon. I did not buy anything just because I didn't like the way it looked. That could have kept you out of the way also from little paper cuts. But if you held short below 2460, you did better than I did. Congratulations. Maybe you're even short overnight. Right now, I am fully flat. I'm going to figure it out tomorrow. Bottoms usually don't happen on a Friday. They usually happen on a Tuesday. So tomorrow, maybe we get a gap down to buy for a red to green trade, or if we open up, maybe they open up and fade. For me, I'd rather be flat because there's no edge here. I liked short last night, and things look even better shorter now, but I'm not going to short with the spiders down 3 handles, 3 points below where I was yesterday short, just to have something to do and something in play for tomorrow. I'll wait after price discovery. With all that said, hope all is well. See you tomorrow. Actually, I won't see you at the morning call tomorrow. I'm trading out of short hills. I trade out of short hills on Fridays, but I will give you some levels on Twitter, and I'll mark up a chart for you for tomorrow. And if not, again, sign up for Other All Access. The private Twitter is less than $10 a month, and you get my color and content and levels all day long. Okay? And if not, if you want to go even further, my note, very extensive, and it's done every day and delivered to you by 8:30. Have a good one. Bye-bye.